pleased to be with my very good old friend, James Turk. James and I have known each other for a long time. We are not spring chickens, either of us. So we've been around for a while, and we've both been around in the gold industry for a while. I think, James, we started roughly at the same time, around the beginning of the century. You started with a business, consumer business, buying gold for wealth preservation purposes and investment. And we started really with some investors, high net worth individuals that we advised, and also for ourselves to preserve wealth. And that later became a business that is now global, like yours. So, I looked back at an interview we did 2011, I think it was. You did with me in Germany, and basically I just listened for a while to it, and problems were similar. The European problems were the same, and the EU problems were the same, the dollar problems, etc. And here we are, 14 years later, and have things developed in the way you expect? Now, I have to mention that I know that James is a student of history, and he has the most wonderful, he tells me, I haven't seen it, a collection of economic books. And so he really understands what Churchill once said, which is, the longer you look back, the further you can look ahead. So therefore, I know that this is, you, like some of us, are understanding what's happening in the world better than the majority, because we study history. And everybody who lives today, especially politicians, believe that because I'm here today, it's going to be different. So we don't need to look at history. But tell me, how did you get into this, and how have things developed since you started? Are they as you expected, or has it been better or worse, however you define that?
Yeah, the only thing I think that's different, and what I didn't expect, is how long it's taking things to play out.
Yeah.
When I finally, did the research and started to understand how the world really works, what money really is, and how the financial system works, because I had a very varied career. I was trained as a banker, started trading when I was within the bank, then joined a commodity futures trader, one of the largest in the States, in Greenwich, Connecticut, and then went to the Middle East, managed the commodity department for one of the sovereign wealth funds of one of the Gulf countries, and subsequently started out on my own. Launched GoldMoney back in February 2001, bringing all of that perspective, what I learned from my parents in terms of sound money, and what I learned along the way. And it's been quite clear to me that the dollar is on a road that's heading toward a cliff. We just can't predict when it's going to go over. And it's taken much, much longer than I thought. They've kept the system afloat, but to do that, they've restricted a lot of our freedoms, our movement of capital, and things that previous generations took for granted as a natural right. So, we're still headed down this road, and I think that's the big surprise for me, that, I thought when John Rubino and I wrote that book back in 2004 about the coming collapse of the dollar, that it was imminent. And then when 2007, 2008 hit, I thought this was it. But they managed to keep the system going, floated it with more phony money, and kept the liquidity in the banking system. But the system that we're working with is essentially broken. And until we go back to gold, the discipline that gold imposes on governments and their reckless spending, we're going to be heading in the wrong direction. We want to go back in the right direction. Gold is the answer for that. I mean, we both remember the 1970s.
Yes.
And I keep remarking how similar the problems are today to some of
Yeah.
the problems we saw back then.
Yes.
The big difference, of course, though, is back then the US was the largest creditor nation in the world. Now the U.S. is the largest debtor
Yes.
nation, not just the world, but the universe
No,
has ever seen.
no,
And
no.
it's getting worse and worse. So, ultimately that reflects in the currency. And that's where we have all of these problems with inflation, rising prices. And in order to keep this thing going, we see more government suppression. And that's unfortunate because that really impairs individuals' right to act, right to invest and participate in the economy in ways that they want to. And any kind of impairments or impediments in government interventions like that really prevent commerce from happening to the full extent that it otherwise would.
Hmm. Yeah, no, as you say, of course, I moved to the UK from Switzerland in 1972, it was. Or 19, yes, 1970, no, 71, it doesn't matter, 71. And of course, I started working with Dixon's, which was then a relatively small retail company that we later built up to a FTSE 100 company, and well, the biggest consumer electronic company, a retailer in the UK. So we went through all of these cycles, and when I started, I got my first options at 136 pence, £1.36. And then 2 years later, sometime it was 74, it was, I think, the shares were down to 10 pence. So from 136 to 10 pence. And the company was not in trouble. We were not over leveraged, and there wasn't financially any pressures. But the stock exchange collapsed, of course, worldwide, especially US and UK, consumer stock like Dixon's had what is called a high beta factor. They go down more than the market.
Mm-hmm.
So it went down, as I said, well over 90%. So that was a good experience to have as a young man. Because, you get straight away you learn that this can happen in markets, and you better be careful not expose yourself to something that can hurt you. But of course,
I remember that time very well. And I had a similar experience back then.
yes,
This was when they had the secondary banking crisis in the UK.
yes,
And ultimately it had a worldwide impact. I was living and working in Bangkok, Thailand at the time. And I was the assistant manager of our bank, of our branch, of the big New York City bank that I was working for at the
yes.
time. And Herstatt Bank, as you may recall, collapsed in West Germany, and that brought the international banking system down to its knees, of which the UK secondary banking crisis was ultimately a part of. And it actually sort of set me on a path to learn more than what I'd learned in the university about gold and silver and sound economics, and what money really is. And that's ultimately led to the idea for GoldMoney in 1979, but long before the technology ever existed. But it just came to me that eventually we're going to get rid of the issues that create banking problems, which of course is the counterparty risk that you
Mm.
have when the currency is based on the credit within the banking system, as opposed to using tangible assets. But that's where I think we're ultimately headed. The way I see it, Egon, is that currency evolves and becomes more efficient over time. The technology makes it so. We started at very rudimentary weights of gold. We ultimately had coins. Coins became better in terms of the quality of the printing. The edges were engraved in order to prevent clipping coins. It became better refined. And then in 1694, we had a technological advancement called the banknote. And
Mm.
we've been using bank ledger currency ever since as the
Yeah.
principal form of payment. And that's what caused the problems in Herstatt Bank and all of the other banking crises that we've had throughout
Mm.
history.
Mm.
And I think ultimately I call it peak banking, because when you stop to realize that banks have two functions, they are lenders and they are also responsible for the clearing system. Those two functions are like oil and water. They don't mix. You have to separate the two. Lending will continue, but there's new technology available now in the payment side of the business that ultimately is causing, peak banking. We're going to be moving away from payment systems within the banks. It's inevitable. It's become too expensive, too risky, and the technology enables other things to be used as a form of payment within global commerce. So that's, I think, where we're headed in terms of the future. And that ultimately means that the currencies that we now see are going to change fundamentally. We're already seeing it to a certain extent with the cryptocurrencies, but I think they're just a stepping stone to something better, which ultimately is,
So
gold circulating digitally.
do you think cryptocurrencies will actually play a major role in the future payment system? I mean, I'm intrigued to see that the whole of the Trump family is basically involved in the crypto industry and trying to or making billions, led by the president himself or encouraged by him, and Trump. President Trump also, changing regulations and laws to the extent that it can be used freely. I've always been intrigued by cryptocurrencies, and of course, some people have made fortunes with them. But to me, they're not the form of money that I can believe in, and I guess you're the same, because there is. It can't replace gold, and if it does, we'll have to wait a few thousand years to prove it, in my view. And it is certainly not. There has no intrinsic value. It could be a medium of exchange, but it's too volatile for that. The gold, for wealth preservation purposes, it doesn't replace gold at all. It can't. It has nothing to do with wealth preservation.
Yeah,
So
that's absolutely right. That's why they're called cryptocurrencies. They're not crypto money.
yeah,
Only gold is money. It's a tangible asset. And when
absolutely.
you use gold, if you go into a store or you go buy a car and you put gold coins down on the counter and you walk away with the car, there's no lingering obligation. The exchange is extinguished at the moment that the tangible asset exchanges for a tangible asset.
Hmm.
If you use cryptocurrencies, if you use bank ledger currencies, there's a third party involved. In the case of the banks, they have to go through the clearing system. In the case of cryptos, you have to be dependent upon the electric grid and the internet, and a mathematical formula that supposedly we don't have the technology to break at the current, but maybe that technology will be developed in a month or a year or 10 years or something like that. Gold doesn't have that issues. And also, once gold is mined, it's mined forever,
Hmm.
unlike cryptocurrencies, which are constantly reliant upon electricity and the consumption of electricity. So, I mean, cryptocurrencies are an important development technologically, but they're a stepping stone, as I say, to something better, which I think ultimately is digital gold currency, where gold stays in the vault and it just moves digitally between the payer and the payee. So that instead of moving a coin across the counter, the gold stays in the vault and the payer on his mobile phone clicks it from himself, from his hoard or stack of gold to the payee stack of gold. The title changes instantaneously. So, but both gold and cryptocurrencies have advantages and disadvantages. Gold has been confiscated many times throughout history because it is a tangible asset and it is money. Cryptocurrencies based on current technology cannot be confiscated. So the weakness of gold is the strength of cryptocurrencies. But on the other hand, that weakness of gold, which is a tangible asset, is the weakness of cryptocurrencies. You can't hold a cryptocurrency in your hand. So
Exactly. And although they pretend that there is a Bitcoin currency, always use it. It looks like a gold coin, really. I mean, which
yeah, but
and the public believes that. That's the way Bitcoin looks, like
yeah,
a fake gold coin.
yeah, no, that's exactly right. I mean, but it all depends on the code and it all depends on the math. And right now, the math is not breakable, but who
No,
knows whether that's going to be true, in the future.
but isn't there a risk? I see Bitcoin now as a similar risk to any mania, whether it's tulip mania or whether it's silver in the 1980s with the Hunt brothers, um, because you have massive manipulation of the price and massive leverage Yeah, especially this micro strategy, as it was called. They're buying and borrowing money, buying and leveraging bitcoins to a massive extent. And to me, that is artificially keeping the price up. And to me, this Bitcoin is a market for buyers, but not a market for sellers. And I see the Bitcoin price very much going hand in hand with the Nasdaq price. And I think the Nasdaq, like the other stock markets, are now getting near a turn, which we've said this before, you and I. We thought it would happen earlier, but I see now again we're in a period when there's a very high risk that we will get this major downturn in all markets, stock markets, currency markets, and obviously other asset markets. Bond market, in my view, is going to collapse totally over coming years.
I agree completely on the bond market. I think
Mm.
you want to be out of fiat currencies or anything related to an asset where you're earning interest income based on fiat currencies, because the purchasing power that you're using now to acquire that asset is never going to be returned to you in full, even if interest rates go up in the future.
Mm.
But with regard to the stock market, I agree that Bitcoin has been trading like the Nasdaq, and I think it probably, well, first of all, let me go back. I for many, many years, going back to 2013, I had always felt that Bitcoin, because I've been involved with Bitcoin from the very beginning, Bitcoin had the potential to go to 100,000. I've said that a number of times in interviews over the years. Now that we're over 100,000, I think Bitcoin still has the potential to go much higher. Because if you look at the total amount of purchasing power in the world, represented by currencies, represented by the purchasing power embedded in gold, the purchasing power embedded in silver, the amount embedded in cryptocurrencies, its market cap, in other words, is still relatively small compared to the total amount of purchasing power. And if we do get a fiat currency scare where people want to get their wealth, their purchasing power out of fiat currencies into something safe, obviously they're going to go to gold and silver too. But they may also go to cryptocurrencies, particularly the younger generations who don't really understand the advantages and the beauty of owning tangible assets like gold and silver. So I think there is still more upside potential in the price of the cryptocurrencies relative in fiat currency terms. And by that logic, I think there's also more upside potential in the stock market, assuming central banks don't impose a liquidity squeeze, what the Federal Reserve seems to be doing here in the States by reducing the size of its balance sheet. Even though the debt is growing in this country, and the M2 is not growing at the high rates that it had been previously. So there is a bit of a liquidity squeeze going on in the country, and that could ultimately bring stocks down. But remember, it's a market of stocks, not a stock market. Technology might get hit, but those stocks that are involved in tangible assets could continue going higher if the fiat currency continues to weaken or it falls. And I always like to use, again, the example of owning Mercedes-Benz in 1920 before the German hyperinflation. If you own Reichsmarks after the hyperinflation, you got wiped out. You didn't own anything. But if you own Mercedes-Benz after the hyperinflation, you still own Mercedes-Benz. As long as the management of the company knows how to deal with and respond to the problems of a hyperinflation, you're better off owning equities than you are owning a fiat currency. But the question is, you have to have an equity that makes sense. And these are basically ones that are involved in tangible assets, have minimum exposure to fiat currency, and produce a product that people want. So you want to stay basically out of the banking system,
Yeah.
which I think the NASDAQ Bank Index has been giving us a warning now for quite some
Mm.
time that it's underperforming. And with my fear index, my longtime formula that I've been using for over 40 years to value gold, it's still very low, but it's been rising now for quite some time. And that's usually an indication that we're headed toward a banking crisis of some sort. So I think we have some unbelievably difficult times coming ahead, which is all the more reason to own gold physical gold and physical silver. And I always emphasize the physical part. Don't own ETFs or any of the paper representations of them.
Absolutely.
You want to own the
Yeah.
real thing.
Yeah. Yeah, I think, you mentioned Germany, but I think we're in a different situation now because Germany was an isolated country that had problems since the war and the war debts and hyperinflation. But the world around Germany functioned much better than Germany, and therefore Germany could export their goods to other countries. Now we're in a situation where we have a global crisis, especially in the West. And I think there is no one that can save anybody else at this point. Eventually, of course, the East will come up as the winner here, as power goes from West to East, economic power and also political power and also military power. Obviously, Trump is fighting a losing battle now on all fronts, whether it's tariffs or whether it's Epstein or whatever it is. He sadly, I think, is going to lose this. But you as an American might have different views. But I think he's going to lose this struggle. And America, although it's a very, very powerful country, an innovative country, I don't think that. I think the financial crisis is going to be too big, and the banking crisis that we will see in America will also bring the stock markets down, in my view, because we need to have a real clear out of and of course the US is running deficits of 2 trillion a year, increasing, and it'll be a debt which is unsustainable, and the only buyer of the debt is the Fed, of course. And if you have the government issuing all the debt and the Fed buying all the debt, then no other buyer, then eventually the value of these bonds will go to zero and the interest rates will go to infinity, and you will have a financial crisis in the US and the same in Europe also.
You made a good point. You made a good point that the crisis is potentially global, and contrast to Germany, they were able to look to others to get bailed out. This time, you're absolutely right. There's no one else to bail anybody out. The only way you get bailed out is by going back to gold. And interestingly, the Federal Reserve here just released a paper yesterday or the day before looking at possible revaluations of the gold reserve.
Yeah.
And ultimately, I think that's what they're going to go to. It's if the U.S. had a constitutional monetary system or had a monetary system that was based on the Constitution, we wouldn't be in this problem. The framers structured the Constitution the way they did because after winning the War of Independence from the British Empire, the 13 states created the monetary provisions of the Constitution because the first currency called the Continental collapsed in hyperinflation. They didn't want to go through that again, so they put gold and silver in the Constitution. And so it was until 1971 when President Nixon temporarily, to use his word, took the dollar off of gold. So all we have to do is look back. Obviously, there's going to be a hell of a lot of adjustment, but that's the price you pay for 50 years of abusing the rule of law and what the Constitution says, and jettisoning the wisdom of the framers of the Constitution who went through this situation before.
Yeah, but I think this revaluation of the gold reserve, as I see it, is only a book transaction. It does nothing to increase the wealth of the United States whatsoever, and all it can lead to is issuing more fake paper money, which will further debase the value of the dollar. So I don't see that will have any effect on the U.S. economy or not on the gold price either, because I mean, whatever the U.S. does, I mean, the power is going to lead away from the U.S. anyway. And talking about that, of course, that the St. Petersburg Exchange is now going to start trading gold.
I saw that. Yeah, you're right about it's only a fig leaf to buy some time, if they revalue. Yeah. What I'm implying is that not only do they have to revalue and recognize that the dollar needs to be devalued significantly, that they also have to go back to letting gold and silver circulate once again as currency, which is the way it's supposed to be. I remember using silver as a child growing up in the States, and there's this. It reserves purchasing power like gold. My parents used to drive the family car into the local gas station and fill it up with $2 worth of silver coins. Today, if you take the content of that silver coin, you can still fill up the family car, but $2 barely buys you. It doesn't even buy you, a gallon of gas, maybe a half a gallon of gas or something like that. So we have to go back to what the Constitution says and back to, undo what Nixon did in the 50 years that he put us into the wrong direction. And that's going to create a lot of chaos and a lot of difficulty. But the longer you delay it, the worse the final crisis is going to be.
So what worries you the most right now, James? We have a global financial crisis, which will, in my view, get a lot worse. I think we'll have major defaults and banking defaults. I think central banks, of course, in theory, or certainly in Western central banks or the Fed, in theory, they never default, but the de facto default by just issuing more and more worthless money. So that's the default. So you have the financial crisis. And then, of course, we have the risk of, in the US, in Europe, we have the risk of internal conflicts, civil wars, or struggles between immigrants and new parties growing up, right-wing parties, left-wing parties, new Nazi parties, etc. And we're already seeing protests today and smaller internal fighting, but I think that could develop into something more serious. And if you look at history again, that is very common that these kind of domestic conflicts happen at the end of an era. I read a few weeks ago that, for example, in the UK, there are 50,000 registered terrorists.
Mm-hmm.
And, it's not the terrorists themselves that register themselves.
Yeah, understood. Yeah.
It's obviously the MI6, MI5, or whatever police that does it. And so we have these, what's happening in Iran and what's happening within the US and Iran and Palestine, etc. It means that there are more and more cells operating throughout the US and Europe that could start terrorist attacks at any point. And what I understand and read is that they're not just individuals starting to make problems, but they're actually also, they're organized and their plans are to attack infrastructure, water, energy, etc., etc. So yeah, but that's another risk. And then we have, of course, the geopolitical risk. I mean, the war situation and now is worse than it's ever been. And this war in Ukraine, which, as I see it, always was a war between the US and Russia, is now drawing in Europe also into this. And of course, I always see political leaders as instruments of the time. In good times, or at the bottom, at the end of a bad era, you get good leaders like in the 1980s, for example, Reagan and Thatcher. And at the end of a monetary era, which I think we are in now, well, you and I expected it to happen earlier, but I think we're not far away from it. And then at the end of a monetary era and before a downturn, you have the worst leaders. You have the leaders who are the perfect ones to lead us into the downturn and make things as bad as they possibly can. And we're seeing that in the US, we're seeing that in Europe, with basically every leader being extremely poor, and there's no statesman around anywhere. And of course, what do weak leaders do when things at home are difficult? They start wars, because that solves two problems. One, they can raise more money or borrow more money because people will accept it because you blame the war. And secondly, it gives them enormous power to play war and pretend, have all the meetings and being important to start war. And that's what the Europeans are doing now, also led by Starmer, I would say, who was an extremely weak opposition leader and was just lucky that the other party was so bad that he was pushed out, and he's now become prime minister. And sadly, it's going to be an absolute disaster for the UK, both economically and politically. And at the same time, they want to be part of the war because that makes them important. So if you look at all of that picture, both the
There's a lot to worry about, isn't there?
economy, domestic politics, geopolitics, etc. How do you see this developing, James?
Yeah, there really is a lot to worry about. And I think war is something that has to be considered. Um, but I'd like to bring up, look at it a slightly different way. We all talked not too many years ago about financial repression, and still we talk about that to a certain extent. What central banks are doing, what governments are doing with intervention, and that financial repression was manifest in a number of different ways. After toward the seeing what they did during the COVID crisis, I started becoming more concerned about political repression. And I wrote my last book, Money and Liberty. It came out in 2022, which explained the inextricable link between gold and liberty. You can only have true liberty if gold is being used as money. And the reason why that's the case is that gold is a natural element that's only produced when it's profitable to do so. And the above ground stock of gold grows by about 1.75% per annum, which is approximately equal to world population growth and new wealth creation. So it follows perfectly Milton Friedman's, what he called his K% rule, that you have to have a consistent growth in the money supply as the population grows. And that's why gold preserves purchasing power over long periods of time. But the political repression, the reason why you need gold to avoid political repression is that political power comes from money. If you allow governments to create purchasing power out of thin air, which is what they're doing now, they can wage their wars. They can, put people in jail and do this and do that. But you can't create gold out of thin air. Gold comes out of the earth and it's dispersed in such a way in the Earth's crust, and I traced this back to 1492, that the growth rate of the above ground gold stock is about 1.75% per annum, year after year after year. It's the ideal form of money. It's natural money. And this is the basis of what I call my theory of natural money. By avoiding gold, we're opening up the opportunity for political repression. And we're seeing that in many countries. We're seeing what in the UK is called two-tier justice, where the police are more concerned about what's being said online and social media than actually collecting criminals or thieves of mobile phones, which has become a major theft of mobile phones has become a major issue in London and the other major cities. So the political repression, to me, is the bigger worry than the possibility of a war. But I think you're absolutely right. They may try to worsen wars or impose more wars to try to increase their power. Because when you have sociopaths in power, that's what they look for.
Yeah, yeah, there's a big risk. And, of course, there are many theories, and you probably followed some of them, that this is Lady Jacobson who writes that, this is about 72 seconds to destroy the world. And she's studied this for decades and interviewed all top people of military expertise, intelligence, etc., US top military people, MI5, MI6, etc., etc. And basically it only by just a little mistake somewhere, the world is gone in, so I think it's 72 seconds, she says, from the time the first bomb until somebody, even if that's a false flag, then it can trigger something. So that's a very dangerous situation we are in. But the good thing is we don't need to plan for that, because if that happens, we don't have anything to worry about. Our gold will be worthless, and we won't be there to worry about it. So there's no use planning for it, and let's hope it doesn't happen. But and then the war. There's not going to be a war on the ground in Europe, in Western Europe, for example. America's always worried about the war in Europe, or Russians are coming. They're not going to come west in Western Europe. There might be some continued war, certainly Ukraine and Russia. That's possible, and Europe might send some troops just to show their support and power, sadly, to Ukraine, and that's not going to help anyway to solve that war.
The Russian response to Ukraine, to me, seems quite clear based on recent disclosures as to what was promised after the Berlin Wall came down. And if you stop to think that, in the 19th century, Russia was invaded by France with Napoleon, and then in the 20th century, Russia was invaded by the Nazis. You would tend to think that they would be a little bit paranoid about the West invading again. And Russia did occupy Eastern Europe, but that was to provide, after the Second World War,
Yes.
that was to provide a buffer to protect, interventions again or invasions again from the West. And here we have NATO, which is supposed to be a defensive uh, uh, alliance against aggression from the Soviet Union. It served its purpose. NATO should have been disbanded, and Russia should have brought in.
Mm.
Russia should have been brought into the
Mm.
Western, into the whole Western world, which is what they were in the process of doing.
Mm.
And then you had the war hawks in Washington, the neocons and whatnot, decided that for the things that President Eisenhower warned us against, the military-industrial complex, that military-industrial complex took hold of the power in Washington, despite the promises not to move NATO eastward after the collapse of the Berlin Wall.
Yeah.
So I can understand, the Russian aggression
Sure.
or worry in terms of
Absolutely.
what they're doing to protect their
Yeah.
interest. And in that sense, in terms of the world's leaders today, Putin has to be viewed as one of the strongest of leaders, out there.
Mm.
Not that I agree with him or his tactics
Mm.
and some of the things he's doing, but he's protecting his country. And
Yeah, I mean, I often say, we remember the Cuba crisis with Russia and the US. But, if today, if the US was surrounded in Canada by, let's say, Russian missiles or troops on the border, in Canada, in the Pacific, in Alaska, in the Gulf Stream area, in Mexico, if US was surrounded like in all of those areas, like Russia in the last 30 years has been surrounded by NATO countries, totally pushed in by the US. Of course, the US would not accept that situation either, just like Russia hasn't accepted it. So
what has to happen is that people and countries have to learn to live with their neighbors. That's what it really
yeah,
comes down to.
yeah,
And accept that everybody's different. They have different interests, but diplomatically work out a compromise rather than going to war over something.
yeah, absolutely. James, we're coming to the end of our discussion, and we've certainly covered a lot of areas, but of course what people are always interested in is, so with all of this, what's going to happen to gold? And here we have two of the old timers in the gold industry, and two of the survivors, if you want, our good old friend James Sinclair. He died a couple of years ago now, sadly, or I think it was a year ago, was it? And and I've stopped giving price forecasts. I said 20 years ago that gold would reach at least 10,000 in today's money. I said that, but since then I realized that forecasting is a mug's game. So I look more at risk. We're in gold to preserve risk. We also were lucky enough to start buying it in a bigger way when we started the business 25 years ago, like when you started. So we follow this rise, and obviously we knew that at the time when we went in, gold was undervalued and underloved, and I still think it is today. Tell my colleagues that our company has had a very good growth for the whole of the 25 years we've been in business, but I think we haven't started yet, because what's going to happen in the economy and also in the gold market, where it's still only 0.5% of world financial assets in gold. So I myself don't give a price forecast anymore. All I say is I think that gold, because of what's happening in the world and what's happening also with the BRICS countries, now starting to dominate the gold trade totally. They're the only central banks buying. Western central banks are not buying gold. Only BRICS countries, and therefore, and also central banks moving their dollar reserves to gold. that will lead to, in my view, and then the public following, of course, that will lead to gold going up by multiples from here, because we know there is not enough more gold around than the 3,500 tons produced. So the future increase in demand can only be satisfied by price, higher price, not by higher quantity of gold. So therefore, I feel very confident, and I'm not a gold bull. I'm just looking at the facts, and the facts are very clear. I think, as I said, gold will go up by multiples from here. Of course, then we measure it in funny money, but that's the only way we know how to measure it. It would be better to measure it in cows or chickens or whatever. But nevertheless, I think gold has and silver has got a very important period ahead of it where it would be totally revalued even from here. So that's my view. What is your view? What's going to happen to gold and silver?
Gold wins regardless whether there's inflation or deflation. It won in the 1970s when there was inflation. It won in the 1930s when there was deflation. What I mean by winning is that purchasing power of gold increases in either of those environments. So what I do when people ask me about prices and stuff, I refer to my fear index, which is purely math. And what the fear index does, I was mentioning before about the total amount of purchasing power that exists in the world, and some of that purchasing power is being conveyed by fiat currency, some is being conveyed by gold, silver, and even cryptocurrencies. And the percentage of gold relative to that total amount of purchasing power is right now very small by historical standards, but the trend is rising. So that suggests to me that more and more purchasing power is coming to gold. You could have a massive deflation and you still end up winning by having more purchasing power in gold. If the quantity of dollars somehow was to disappear, 50% of it was disappear overnight. If the fear index rises in that environment, more purchasing power is going to come to gold and you're going to be better off, just like it did in the 1930s when you had the massive bank failures throughout the country. So I've been using the fear index going back to the 1980s when I was working in Abu Dhabi, managing the commodity portfolio for that sovereign wealth fund. And it's very reliable. Just follow the trends in the fear index. And right now the trend is up. So the way I see it is that regardless of whether we get inflation or deflation in the future, as long as the trend in the fear index is up, and it is up now, and it's been rising for several months and looks like it's going to go much higher, and it's still very low by historical standards, you're going to be better off with gold because you're going to be accumulating purchasing power. We have to remember that gold is not an investment. It's just a sterile asset. It doesn't generate cash flow. Yeah. So when the price of gold goes up, you're taking purchasing power out of the hands of people who own fiat currency and putting it to the hands of people who own gold. That's all it is. And that's the math that the fear index actually determines or calculates. So that's my view as to where gold is going. If I had to put a number on it, we're going over $10,000 an ounce because I really expect that we're going into a massive bout of inflation, but probably more like stagflation, where the economy does nothing and prices go up much, much worse than the 1970s. And in terms of the financial impact on the banking system, probably worse than the 1930s. The fear index today is about 3.9%. In the 1930s, it was 30%. In the 1970s, it was 12%. So, relative to those previous peaks, in 2008, it was just under 10%. So relative to those previous peaks, the fear index is still very low. And as these problems that we see in our broken monetary system unwind, the fear index is going higher and gold is the place where you want to be.
James, those are very wise words, and I hope that a lot of people take heed and listen to that. I mean, as we said, we've known each other for a long time, and you've been there as a rock, as a golden rock. We always have interesting discussions. We're actually going to have lunch in a few weeks' time, which I always
looking forward to it.
Look forward to also. My wife, she has never met you personally, I think, but when she saw you first time on, I think, interviewing me 15 years ago or so, she said he looks like a very sympathetic man. And I said to her, "That's absolutely right. He's one of the nicest men, that I know in the industry we're in, etc." So you are
Thank you for your
correct.
kind words. Thank you very much. You also are a very nice man, and enjoy our lunches that we've had in the past, and look forward to the one coming up in a few weeks.
No, it's good. We need each other and we need as many people as possible to understand that they need to preserve wealth now, because times are going to.
And there's a younger generation out there,
Yeah.
Egon, and hopefully they can learn from us old timers, just like I learned from, my parents and a lot of the older people who I worked with when I was in banking. I started banking in the late 1960s, and I worked with guys who had lived and worked through the Great Depression. I learned a
Yeah.
lot from those old timers. So hopefully some of the younger generations can learn from us.
Okay. Thanks so much, James. I really enjoyed the conversation, and so
Me too.
privately we'll see each other in a few weeks. And in the meantime, I wish a lot of people listen to what you said, because that advice is so valuable and can save a lot of people in the next few years. Thank
Thank
you
you very
very
much,
much,
Egon.
James. Thank you.